For now, though, let's get a reaction from a Meta shareholder. Joining us now, EMJ Capital founder Eric Jackson. Eric, it was an initial move down, but it was very short. Now it's higher after hours. Should we pay more attention to the top line here, or the fact that Zuckerberg and co. seem to be keeping a rein, at least somewhat, on expenses, that they're projecting, what, I think it was 94 to 99 billion for full year 2024, and they have a history of reining that in when they need to?
Yeah, I think that was the biggest surprise, John, of what Julia just said, is that that was much less than I think what the street was expecting from the operating expense side. That means that next year's profits have to go up, just like they did this year as they started to kind of pull that back. So I think that was the most important thing. Obviously, they're the king of digital advertising. You know, we had some hints last night with the Snap results and with Google's results, as you pointed out, with YouTube and their core business, that the ad market is reasonably healthy. And, we saw, a greater beat on the top line here, but it's that operating expenses that I think is going to get investors most excited tomorrow.
So does this somewhat nullify the Alphabet effect that we felt in the market today? The one area where they really fell short of expectations was Google Cloud, but now we have ServiceNow coming out strong. We had Microsoft before. And if you were concerned about the ad market, these Meta results should give you perhaps a little solace, no?
Yeah, it's not at all clear. Obviously, Tesla's commentary, I think, spooked the market, a week ago. So you have to take each of these events as sort of a case-by-case basis. But yeah, I think Google Cloud, is a special case in dealing with Google. Obviously, we didn't see the same results from the Microsoft Azure results. So I think looking at a number of these earnings reports so far, there's more good than bad for sure. And then the ad market, I think, is coming back. Remember, the digital ad market was really, one of the first to kind of go into the tank. It wasn't just the Apple changes. It was, a lot of people just started pulling back on ads sooner. Now they're starting to come back. They need the business.
Yeah. Eric, just a few other stats for Facebook here, because it looks like daily active people, that metric actually beat expectations, 3.14 billion on average for September, an increase of 7%. Daily active users were 2.09 billion, and then monthly active users were $3.05 billion. And talking about ad impressions and price per ad in the third quarter of 2023, looks like across the family of apps, that increased 31% year over year, but average price per ad actually decreased by 6% year over year. I guess to your point, how does this speak to the role of Meta in the dominance of online advertising? And after Snap and Alphabet yesterday, and with more results from more companies expected in coming days, is this a tide that lifts all boats, or is it really Meta and everybody else?
Definitely in the ad world, Morgan. We're all playing in Meta's sandbox. I think what's also interesting, and what I'm going to spend some time looking at in the results is just how AI has really gone to the revenue growth and gone to some of the strong results that you just spoke to. We've seen Reels continue to do well from a monetization perspective. Is there more evidence of that in the report? How did chatbots do in terms of driving increased revenue at things like Messenger and WhatsApp and Instagram as well? So Meta has a lot of levers to pull, and in some ways, compared to a lot of the other Mag 7, they can benefit much sooner from their AI investments than many others can.